So I don't know if I was introduced.
I don't think so.
Okay, so I'm Hugh Son from CNBC. I cover banking. This is Britt, CEO of Chime. We have 20 minutes. I'm going to launch into it. So you guys seem to be the first challenger bank to actually break through in this country. Talk a little bit about how you did it, business model, quickly.
Sure. Yeah, we're the largest and fastest growing company in the challenger banking space. We announced today, thank you for breaking the story, that we achieved 4 million accounts this month. So just about a year ago this time, we were at 1 million accounts. So we're really going through a hyper growth phase. The value prop to consumers is we believe that core banking services for Americans should be free. You shouldn't have to pay to have a checking account. And so we've done that by offering a suite of banking services that really revolve around a mobile-first experience. We offer checking accounts, savings accounts, and a Visa debit card. We don't charge monthly fees, overdraft fees, and that sort of thing. And we solve the problem of trying to help our members achieve financial peace of mind. And we do that by giving them a greater sense of control over their money. So our members are hyper connected to our app and our card. They're in the app almost 25 days out of the month. So very highly engaged.
Yeah. And that's how you monetize, right?
We don't monetize through the app. We monetize really through the debit card. So when the card gets used at the point of sale, we get money from Visa as our core network partner. And yeah, if you think about the way the economics work in the payments industry, if a company like Square signs up a merchant sells $100 worth of goods, the merchant probably only gets about $100 of that, and we would earn on average about 150 bps.
Sure. Okay, so let's talk about the growth trajectory a little bit. Again, a couple years to take you to 1 million user base. In the next year, it quadruples to 4 million, which is where you are today. I'm sure you have internal projections, about mathematical models and stuff about what that might look like in a year. I mean, can you talk a little bit about what that could be?
Yeah, the core value props that people are signing up for, of course, is free banking, a bunch of services that help people save money automatically, and then also the ability to get paid early. So we offer people their paychecks a couple days before their typical date of receiving payroll. And as you can probably imagine, that's a really popular feature. And so what's really amplified the growth is that almost half of our new accounts every month come from referrals, word of mouth, and organic. So there's sort of a multiplier effect. As the portfolio gets larger, we get more and more people signing up. And then we're adding a little bit of fuel to that fire. We just raised a few $100 million that we announced in March. And so we're aggressively investing not only into building out the team and additional sort of ancillary financial products, but also into aggressively growing. So if you're watching the NBA Finals, cable television, you'll probably increasingly see television ads from Chime.
Right.
And we're also very aggressive and active in social media. We have the most followers on Instagram of any consumer fintech, and we also have the most highly engaged consumers.
But if you've added 3 million in the past year, is it going to be 5 million in the coming year? Is that
we think in the next few years, we have a vision of banking more than 25 million Americans over the next few years. We think that's very attainable. If you look at any of the major banks in America, they have between, say 25 and 35 million active mobile accounts. And we think there's an opportunity for us to do that. We're really targeting a very large segment of the population, which is a mainstream middle-income consumer. We're not trying to attack the Henry segment or people that in general are probably, maybe they don't love their bank, but they're not feeling a tremendous amount of pain because if you make 100.
You used the word coastal elites when we spoke. You're not looking for the coastal elites, anybody in this room.
No, and look, it wasn't it wasn't the sexiest Silicon Valley investment when we were out trying to raise money a few years ago because we weren't providing services for Google engineers that make $250K. Their accounts at Wells Fargo work just fine for them, I think.
So something that didn't exactly go viral is something called Fin by JP Morgan. Did you try it? Do you know? What's your assessment being in the game?
We certainly looked at it and saw some pictures and screenshots. We thought it was a little bit off the mark in terms of really addressing consumer needs. I don't think it was well positioned for success, is my understanding, based on how they set it up internally. And what I've always said, even from the day that they launched, I think JP Morgan, it's one of the most venerable brands in the history of American corporation and business. So why shy away from that? JP Morgan should have awesome products, and they don't need to create separate brands to appeal to different segments. They should create basic checking account services that appeal to this segment as well. They're extremely successful and have huge levels of respect. And to be honest, I think the fact that we were just talking about this over dinner last night, the fact that they were able to pull the ripcord on something that wasn't working relatively fast for a big company. I have a lot of respect for that.
Yeah, experiment. I mean, you talk about banks with brands, and Goldman has Marcus. There's probably a reason why that they're sticking with a separate brand, right, for the mass market. So the big three in this country, they get a huge proportion, something like half of all new deposits. I mean, you guys are not putting Chase out of business anytime soon.
No.
Who's getting squeezed here?
Well, there's a number of dynamics taking place in consumer banking in America. Actually, the big banks are growing at the expense of a lot of the smaller and mid-sized banks that don't have the, technical resources to build mobile offerings and to invest in technology the way that those. I mean, these banks spend over $10 billion a year on their IT budgets.
Yeah.
So I think the big banks are squeezing the mid and smaller banks. And if you look at where our members are coming from, they're overwhelmingly coming from the Wells Fargos and the BMAs of the world.
So this is the death knell of the small community banks, with the exception of those who can pivot to fintech and be like the rented charter for guys like you? I mean, is that, like, there's going to be somebody who loses in the next 5 years?
Yeah, I mean, I don't know. And it depends, like, sort of where you stand politically on this. But if you look at where we were in America in the 90s, it was like 7 or 8% of all deposits were handled by the top 5 banks. Now it's 55%. So that creep continues to happen, and these banks have, multi-trillion dollar asset size. So these are really, really large organizations, which in some ways you could argue are necessary to, you need a big bank to bank large companies. Whether or not they can actually deliver compelling and valuable consumer services, I think, is a different question.
I mean, cheap deposits, though, for all these institutions are the secret sauce. It's the fuel of these institutions, and to the extent that which you guys erode that a little bit, it'll be interesting. So in terms of competition, let's talk about that. Today we have big tech. You have Amazon. CNBC reported Uber is also looking at banking. Apple, who knows, right? They could go into it after the card. If huge customer bases. You have folks like Robinhood and Square who want to get into banking in a bigger way with the adjacencies. You have the European challenger banks who supposedly are coming. Are any of these guys going to impact your trajectory in the future?
I think it's a great time for consumers and consumer financial services. You can obviously see that in the current funding environment. I think investors are seeing a huge TAM and the opportunity for dinosaur companies to be disrupted by technology companies that happen to offer financial services, which is sort of how we look at the world. So I think a lot of those names that you mentioned are very positive forces, great for consumers, will probably keep the bigger banks on their toes and force them to slowly wean off the very fee-driven income models that they have for this category of products. And I think most of those examples highlight the fact that in consumer fintech, free wins, right? Robinhood is exploding. I think I heard something like they open up almost half of all new brokerage accounts in America on a monthly basis. I don't know if that's true, but I heard that at a dinner or something. So, but it's a lot, right? And why? It's because it's free. And
small dollar accounts, supposedly, like $50.
Could be. I don't really know, but I know they open up a lot of accounts, and I think that you look at them, or you look at TransferWise, or other companies that have had a lot of success. It's because they're offering services that are free or much lower fees. I think even the European challengers, many of them have gotten a lot of traction, not necessarily as being the core everyday checking account, but really undercutting FX fees and the very significant fees that the bigger banks charge if you live in London and you're going to Paris for the weekend. And so I think that's been their wedge into the market.
They would need a different one for the States, one would think.
I would think, but I haven't seen anything, although expect to hear something soon.
You guys have been super clever at sort of exploiting inefficiencies in the banking system. So one example, like you guys help your users to get paid a couple days early.
Yeah.
And the question, are people copying you there? And what else in that vein can people expect?
We haven't seen too many copying that yet, but I certainly anticipate that happening. We believe that your banking should be transparent, easy to use, free, fast, and so getting access to your money instantly is a core part of that of that value prop. It's definitely what what resonates with a lot of consumers, whether you're making 35K or 100K. Like who doesn't like to get paid a couple days early? And as you could probably imagine, it leads to a lot of water cooler discussion. Like, hey, I just got paid. Did you?
Yeah.
And hey, where do I sign up? And that's been really great for our growth.
Are there any figures you could share about sort of fraud on those types of efforts in which you sort of extend money to people?
Yeah, I was just on CNBC a couple weeks ago, and we announced that we had now given over $4 billion of early payday to our members, and we've had $0 of fraud so far.
Yeah.
I mean, it's just, we see that the consumer is going to get paid via notification through the Federal Reserve System, so there's always a chance that a company goes out of business and the payroll doesn't actually get into our bank account, but it's never happened.
This is really interesting. This is on
We're
your
basically taking a little bit of a risk
Yeah.
and a little bit of a float, but there's not really much cost of capital because we give you. Most people aren't running to the ATMs anyway, right? Our members generally use their card. They make like almost 50 transactions a month with the card, so everything's Visa or Apple Pay, Samsung Pay, you name it.
To date, this is a riskless proposition for you on your end, relatively speaking, and you engender what on the part of your users? I mean,
we engender net promoter scores that always hover right around 70. So, and almost half of our new accounts coming from referrals. So, that's sort of how we look at it.
The NPS of banks like Chase and Wells Fargo, I mean, that's probably.
I mean, we haven't looked at that
South of
recently.
that?
There was some research a couple years ago that showed for among millennials that a lot of those brands actually had negative net promoter, but I think among the general population, it's not that bad. I think a lot of those bank brands provide perfectly good service for. Chase gets 5 stars in the App Store. Their app's pretty slick. I think a few years ago, people thought we were just a slick app, and I think if you think we're just that, you're probably missing the story. But we are that too.
So, you guys use a partner, FDIC Bank. You aren't, it's sort of the rent-a-charter path. Is that the winning model that you're going to see a lot more from competitors? I mean, we had a conversation the other day where you said the market is big enough for 3 or 4 Chime-like services, even though you guys are the first. So are they going to go that route, or are they going to try to be their own banks? Are they going to pursue that path?
There's been rumors of other fintechs thinking about bank charters or kicking off that process, and that could be something that we pursue at some point. In the meantime, we work closely with our bank partners. Before we launch any financial products, they are reviewed and approved by the FDIC. We have a core value in the company that doesn't sound very Silicon Valley-like, and this is up on our wall, and it's respect the rules. We work in an industry that's highly regulated. We deal with people's money. It's serious business, and so we're very thoughtful before we roll out new products and features, and we make sure that we're buttoned up and we've checked all the boxes in terms of compliance and so forth. So we take that very seriously, and we think we can continue to do that and grow to be a very large business without immediately rushing to become a bank or pursue a bank charter. As you know, there haven't been a lot of those that have been granted. So today, I think the company's best positioned and I think best served by focusing on our members, focusing on creating a great checking account experience, adding additional products over time, and growing very aggressively.
How much of the economics, though, stay with the FDIC institution? I'm just trying to chart out in my mind how, pro and con versus going down that path of trying to be your own bank.
Well, we always want to set up relationships where it's a win-win. So I think they make enough to make it interesting for them, and some of these banks maybe aren't as well suited as a company like ours to attract a broad, large segment of Americans to collect deposits. So we're really good at that, and they can monetize some of those deposits in other ways. I think that's sort of how they think about the business model.
So I had a recent chat with Harry Talwar, the guy who leads Marcus at Goldman. He told me there are a bunch of features actually that they looked at, and because they were too complicated to, in their terms of their disclosures, that they just didn't do for a while. They set those aside. And so, simplicity obviously is the key here in this new sort of fintech ethos.
Definitely.
will you, and then I think when you guys try to ramp up into the, the future products, I mean, there are products that are just by nature pretty complicated. I think of insurance as one of them. Does that affect the way the roadmap to your product release?
That's one of our other core values is simplicity. We have no plans to get into the insurance space in the short term. We're focused on checking, savings, and over time we'll add services in credit and lending and eventually investment services as well. But anything we do will always be driven by this value of making sure that it's really easy to use and helpful. If you look at a heat map of our Net Promoter Score feedback, that would be the biggest word that pops up.
Simple.
Convenient. Convenient, easy, simple.
Yeah.
Yep.
So I think
a lot of that is around notifications, right? People want to know where they stand. 78% of Americans live paycheck to paycheck, right? This is everyday Americans that make 50, 60K. They're living paycheck to paycheck. They want to know where they stand.
This is your bread and butter, obviously.
That's our bread and butter. But I mean, these big banks earn $1 billion to $1.5 billion every quarter in fee income. That's almost entirely these overdraft fees that are charging people that are living paycheck to paycheck, and they go a few dollars negative, and they make huge amounts of money. That profit pool is a huge opportunity for us and probably a lot of other companies, because it's just, there's no way that's the way the world's going to work in 5 years. And I think the big banks will, of course, they're going to get there eventually, but it's really hard. If you ever listen to a bank earnings call, it's like, how's your fee income doing? How's your fee income doing? Well, okay. The motivations are not in line with the consumer, right? We strive to reduce fees, and we have gauges internally to sort of assess how well we're doing in terms of helping our members achieve financial health. That's how we measure success. So
good place to sort of end it, I think. I mean, I think we're on sort of the 20 minutes, if I'm right on that. Correct me if I'm wrong. Folks at CB Insights want us to play a little game called Overrated, Underrated. I say a word, you tell me if it's under, overrated.
Can I add some color or just?
You can do, yes.
All right, let's go.
Yes, you can, if the color's interesting. So, green dot.
I used to work there.
Not anymore.
Underrated.
Though. Underrated, okay, underrated.
No, look, I mean, I think they've done an amazing job of pivoting. They power so many, Apple, Uber,
behind the scenes.
Wealthfront. Those guys are doing very well right now, I think.
Wells Fargo.
I mean, given the current state of publicity, probably underrated, right? I mean, I think they've got a franchise that has done so much for our country. There's probably a huge opportunity to make that a great business. But they've obviously been through a pretty rough patch. So it would be hard to say they're overrated. I don't think anyone's thinking particularly highly of them right now, unfortunately.
Probably not. Robinhood.
I would say Robinhood is appropriately highly rated right now. Those guys, like I said,
the valuation is not overrated, perhaps?
I mean, these are the most sophisticated investors in the world, including some investors that we share. So I think.
Wait, I mean, like Uber. And we're probably going to get more examples this year of VC-backed companies in which the valuations, just because this is the kind of the game we're playing, seem to be high.
I'm a bit biased, so I would say for the most, and I'm an optimist, so I actually think that companies like Chime and like Robinhood are extremely positive forces in the world.
Sure.
They're keeping big incumbents on their toes, and I don't know, if it's small dollar accounts or not, but I think their product is slick. I mean, they're disrupting disruptors. Look at how much it costs to trade crypto, right? That's a big deal. So I would say, fairly. What was it? Is this hype, overhype? Is that what we're calling it?
Underrated, overrated.
Underrated. Okay. Appropriately rated. Appropriately rated.
That's
high.
C.
Yeah.
Okay. So Square.
Underrated.
Underrated.
Yes.
Okay.
I think that's
this is a
when
buy,
I think
folks.
about companies that we look up to in terms of brand, engineering talent, design, usability. We sort of see ourselves as a Square on the consumer side of the equation, right? Like, they're not actually a bank yet, but they create beautiful experiences for merchants that result in very high net promoter score and a platform to cross-sell other products and services that just become natural because they're held in such high regard. So we want to do the same thing on the consumer checking account business, start with that, and roll into many other products that help people achieve peace of mind.
So last one, Marcus by Goldman Sachs.
I think they're probably underhyped too. I think the level of investment that they're making into of all the larger institutions, I mean, they've got a team of something, I've heard 800,000 people that are just focusing on new types of products, and it's hard for a big company like that to transform into a technology company, and I think they're giving it a pretty good run. So I got a lot of respect for what they're attempting to go after there. We don't compete with them head on yet. Not yet. But who knows?
Yeah, we'll see.
We'll see how it plays out.
So I think we should end here. I mean, we're a little bit over time, so I appreciate it. Thank you, guys.
Thanks a lot. Thanks.
I'll take my water.